When I looked at the company, it seemed very ambiguous that for a company that is 250 crore in market cap, your promoter holding is only 18%. SME companies on average have 60 to 70%. What made you in a position that you only have 18% of your own company?
Out of 65 million metric ton, the collection efficiency for municipal corporation is in the range of say 75 to 90%. Roughly about 35% of this collected waste is getting processed. What remains is being sent to finally the landfill sites or the dumping ground that we see. Gap is not a challenge but an opportunity for us to actually tap into this market to generate CBG, and it is estimated that this 65 million metric tons of MSW can generate 5 million metric ton of CBG. Because we are a technology platform, we want to be a TEPC company.
The Solapur plant, you said 4.5 crore comes from there. So what is the stake of Solapur in that? Do you pay royalty fee? Do you pay bribe? Whatever. How does the revenue work there? Given that you're so optimistic about your business, tech is evolving, government is evolving towards your direction, what is the revenue that you're forecasting for FY26?
We will be able to manage the growth expectation that is there, and we will be able probably to exceed the growth percentage also, because a lot of projects would come into execution phase.
Let's assume government is your biggest customer at the moment. Your trade receivable is 304 days. So despite government helping you also, they're hurting you by not giving you money.
I don't know how to respond to that question, but see,
we often wonder what happens to the waste that we dispose daily. We must have seen the municipality trucks come by, collect those waste, but what happens after that? We've got a 250 crore market cap company. The name is Organic Recycling Systems Limited, and we have with us the promoter himself, Mr. Saran. He built the company from scratch. We will discuss all about waste management, what is lacking in India's infrastructure, how they are converting waste into something that's useful through technology. The first 3-4 hours after I started studying this company, my initial impression was this is just another infra company like Anthony Waste Recycling or JITF. But later on, I realized their margins are higher compared to the other companies, and they've got something unique. So I decided let's sit with the promoter himself. So, sir, welcome to the series. Thank you so much.
thanks, Sriram.
I know it's late, around 7, 8 now.
8 now.
And thank you for taking the time.
That's really kind of you to squeeze us in with available time that you had. So,
do you usually stay this late?
not really, but still, yeah, by 7:30, I am able to wrap it up.
Okay. So, sir, getting into the business directly.
Yeah.
What are the 3 or 4 categories of business that you do in this waste management systems?
So basically, Sriram, just to brief you, we have been a technology EPC company, and the way we had initially ideated on when we started this particular company, the ideation was to develop indigenous technologies that would suit the Indian conditions, which would be robust enough to handle and tackle the heterogeneous waste that was coming in as municipal solid waste. Because if you see municipal solid waste, it's quite complex. You know, there's no source segregation. There's a plethora of components when you talk about MSW. So when we decided to set up this company, we were very clear in our mind that it has to be technology oriented, technology driven. Company that would essentially develop indigenous technologies to provide solutions across waste spectrum.
Okay.
Be it your municipal solid waste, be it your agro biomass, be it your various waste streams that come in.
Okay.
And when we started, the whole idea and initial focus was on solid waste management. But as we have evolved as a company, we have transitioned into other waste verticals as well.
Understood. So what are those verticals then?
So basically, if you see, we have now ventured into agro biomass with our Napier cultivation, which we would be taking up as a feedstock to generate CBG out of this particular feedstock at our existing Solapur plant.
Okay.
It would be a typically co-digestion approach that we would be taking up. So we call it Solapur 2.0,
okay,
wherein we are upgrading this plant from traditional waste to energy. That was when we started up and when we commissioned way back in 2013. This was typically a AD to waste to energy plant.
Okay.
And now we are upgrading it to waste to CBG plant.
Okay.
Wherein we would be processing not only municipal solid waste that is coming from the corporation,
Yeah.
but also an additional feedstock that is your Napier grass as an agro biomass. That would give us a breakthrough in actually creating a reference point for this particular technology for agro biomass as well.
Understood.
Besides this, we are venturing into biomedical waste.
Okay.
We are also venturing into, when we talk about agro biomass, we are also venturing into hard shell biomass
Yeah.
with our carbonization systems.
Okay.
Wherein we are able to fix the organic carbon in these particular biomasses to recover green charcoal,
Okay.
which can be which can be substituted to replace your traditional charcoal.
Okay.
And so forth and so on.
Okay, so it's like you divided the verticals dependent on what are you processing, what type of waste you're processing.
That's correct. And besides that, we are also reorganizing the company now within projects, products, and services verticals.
Yes.
So when we talk of projects, it is essentially deployment of technology.
Okay.
Our patented proprietary technology, that's Dryad, wherein we go and we set up these biogas plants
Okay.
as a TEPC company. Then when we talk about products, it is our proprietary Marudram, which is essentially a pre-treatment product that wherein we are able to recover almost 90-95% of organic fraction from incoming mixed MSW. Apart from that, when we talk about product, it is another product is our carbonization system. Sanjeevak carbonization system, wherein we are able to process the agro biomass and recover carbon out of it.
Okay.
And when we talk about services, it is engineering services, feasibility services, and consulting services, which we are now giving to a lot of customers who want to venture into this particular sector, but they are not aware on how to enter.
Understood.
So that is where we are.
So you're dividing your categories first into the type of waste that you're processing?
Yes.
Or you're dividing it by product, project, and services. Got it. Now, sir, I want to address the elephant in the room.
Correct.
Okay. And when I looked at your company, it seemed very ambiguous that for a company that is 250 crore in market cap, your promoter holding is only 18%. Right. SME companies on average have 60 to 70%, while main board listed companies have around 60 to 70% of promoter holding. What made you in a position that you only have 18% of your own company?
Right. So you see, Sriram, when we started this particular company, solid waste management per se, it didn't have a lot of takers, right? Traditional investors were wary of waste management plans or waste to energy projects at that particular point of time. And we were talking about developing an indigenous technology which was kind of moving away from the current, because at that point of time a lot of infra companies were working in waste management space, but they were working with waste to energy concept in mind, right? A lot of incineration projects were coming in that time.
Yeah.
When we started, we decided that we need to focus on the organic fraction of waste, because the inherent challenge for even these incineration companies lied in that organic fraction, because that was reducing their calorific value in the waste composition. At that particular point of time, when we were advocating anaerobic digestion, because you need to understand that when we commissioned our Solapur plant, it predates Swachh Bharat mission, it predates advent of Satat, it predates almost the entire traction that we are seeing in anaerobic digestion space today. In fact, I don't want to, at the risk of not being sounding modest, I would like to say that we were one of the pioneers who actually set up a 400 tons plant based on anaerobic digestion way back in 2012-2013, right?
Okay.
In fact, if I am correct, Indore project got commissioned sometime in 2016 or so. Goa project got commissioned in 2014. Solapur was commissioned way back in 2013. So there, at that point of time, and that particular project when we started, because there was lack of availability of interest from traditional investors, marquee investors, we had, and there was no financial subsidy or financial assistance available from the government as it is available in today's context to today's promoters who are trying to develop something in CBG space or waste space. At that particular point of time, we had no option but to finance the operations or finance the development of the technology through your HNIs and private investors, right? And that money mostly came as a debt into the company. Having demonstrated the technology at Solapur, when we started getting a lot of traction in our own technologies and our own services that we were offering in the market, and when we got listed finally in 23, it was a very conscious and strategic call to actually divest and settle the debt that was in the company so as to reduce the leverage of the company, right? So I would like to draw your attention to a fact that promoter has not never offered the shares for sale. There was no sale OFS from the promoter, right? And in fact, we don't plan to do that so also. In fact, on the contrary, in near future, as the company grows, and probably in the next rung of fundraise, we might as well as pick some stakes up, to peg up our stake. I would also like to draw your attention to the fact that if you see a lot of technology companies, early stage technology startups, for instance Zomato, for instance Swiggy, for instance Paytm, right? Now these are essentially technology companies. None of these listed companies have promoter holding more than 10%. So in a way, having a 18 point something percent promoter holding, I feel for a technology startup, for a technology company, is good enough starting point, right? Because at the end of the day, the intention is not to divest or create wealth out of the shareholding. The idea is to create a company, and when we decided to settle the debt, and as a reason the shareholding got dropped, I think it was a very conscious call on part of promoter. I mean, you will have to appreciate that we let go of that shareholding to in the interest of the company for the long term prospects of the company. So that now, in fact, when we are looking at projects, when we are looking at consolidating projects, we can actually raise capital at a efficient in an efficient manner, right?
So nonetheless, if you see what you're trying to say is that you diluted stake so that the company can survive, because back then there was no government support, and most of the tech companies, if you see the projects that you see that started in 2012 to 2015 season, it's all gone bust. But because you were able to dilute, get the right investors, raise the capital when required, you're able to sustain that company till today, and
not only sustain, we were able to develop the technologies. There were because it's an indigenous technology that got developed, right? We were able to make continuous incremental improvements. There is an operational experience that the company brings on the table, because we have been operating a plant for last 13-14 years now. Right? So over a period of time, the investment that we got into the company, I mean through debt also, it went into development of technology, which today we are able to capitalize, right? I mean, Solapur got recognized as one of the best practices plant under Swachh Bharat Mission when Swachh Bharat Mission came into existence in 2016. We were able to demonstrate the technology at a scale, right? Which nobody else had done at that particular point of time. There were a lot of learning curves that went, what do you say? I mean, there were a lot of first that got operationalized because of this plant. Right? Be it your tariff fixation, be it your operationalizing of so many government GRs, because none of the projects were commissioned on anaerobic digestion prior to Solapur. Right? So there, if you see greenfield projects or green field technologies being developed, obviously the capital requirement is huge, the gestation period is huge, and investor patience is also required, right? And that is where we were at that point of time. But its advantage today is that we have been able to leverage the technology and the operational experience that we have gathered over these years because of this to our advantage now, and now it is helping us in our growth trajectory.
So just a final comment on
Yeah.
this topic before we delve into the business. You said Swiggy, Zomato, Paytm, there are multi-billion dollar companies. So when they were your size 200, 300 crores, the promoter holding was much higher. Nevertheless, it is reassuring to know that you plan to increase the stake. And secondly, most importantly, you have not sold your shares even a bit in the
That's
company from what you've said.
That's
I think during the IPO you raised around 50 crores.
Yes.
Which you used to repay debt.
So 37.5 crores is something which we repaid
Debt.
debt.
Okay. Now, getting back into the business, I believe the Municipal Corporation of India, all combined, generate a solid waste of around 65 million metric tons per annum. And I'm sure most of this is not even recycled or used to convert into energy.
Right.
So what happens to the other portion of it? What's happening there?
So if you see, if I may take reference of one of the CPCB reports that I had seen, roughly about 30-35% of this particular waste quantum that you just mentioned is getting processed.
Okay.
So when you talk about waste generations, out of 65 million metric ton, the collection efficiency for municipal corporation is in the range of say 75 to 90%, depending on the tier 2, tier 3, corporations, where they have deployed effective collection and transportation systems. And thereafter, roughly about 30%, 35% of this collected waste is getting processed by one way or another. What remains is being sent to finally the landfill sites or the dumping ground that we see.
Okay.
So there, what we feel is that there exists a huge potential, because this gap is not a challenge but an opportunity for us to actually tap into this market, where we can actually exploit this particular feedstock to generate CBG. And it is estimated that this 65 million metric tons of MSW can generate somewhere close to 5 million metric ton of CBG.
Okay. Okay.
So that's the potential only from this feedstock. Your agro biomass and your other feedstocks are separate altogether.
Okay. So you're saying that 80% of the waste is being collected by the municipal corporations, out of which 28 to 30%,
30 to 35%
are being processed by companies like yourselves.
Yes.
And the other 70% of that 80%, which is collected, of course, is not being processed and it is disposed in unscientific ways.
Wherever landfills are available, it is going to landfills, and mostly it is going to dumping grounds, which again now it is changing because the scenario is changing. There is a lot of awareness post Swachh Bharat mission. The budget allocation for these municipal corporations are better. So a lot of positive changes are happening on the ground, if you see.
Okay. So then this 30%, let's say everything comes to you in a hypothetical world. What do you do with them? I hear that you have 4 types of products that you manufacture out of this. One is the biogas, compressed biogas. Second is manure. Third is the RDF. And fourth is the charcoal.
So yeah, I'll answer that. So typically from MSW, what happens is, if you say a typical composition of municipal solid waste in India, mixed MSW when we talk about, roughly about anywhere 40 to 55% is the organic fraction of waste that is available in this mixed waste. It is only this organic fraction that contributes to the biogas production.
Yes. Okay.
Roughly about 35 to 40% is combustible matter. Which goes into RDF, which is refuse-derived fuel.
This is inorganic.
Which is inorganic, and which basically has a combustible calorific value, and it is combustible matter, and it can be sent to cement industries, or it can be used by boilers for their heating purposes.
Yes.
15 to 20% is final inert. Which is basically nothing but sand, silt and stones, which has to compulsorily go into landfill sites, into scientific landfill sites. Now, essentially across this particular waste value stream of MSW, what we are doing is that on the organic fraction, we are processing this organic fraction through anaerobic digestion, which is basically, anaerobic digestion is basically you decompose this waste into biogas in absence of light, in absence of oxygen. What happens inside your stomach is something what happens into the digester, in layman's language. The combustible fraction is further shredded, further processed, and RDF is being produced by it. The RDF goes to cement industries
Okay.
because there is, as per CPHEO guideline, and there has been a directive by government also to actually blend this particular RDF into cement cleans.
Okay.
So as to have an effective waste disposal system and also to reduce the coal burning. So that goes to these cement companies, and the inert finally goes to the landfill site. That is what we are doing at Solapur.
Got it.
Now, the fourth part, the charcoal part, what you spoke about, uh, is basically it's a product which got developed accidentally. It was it's an interesting story to narrate, because at Solapur itself, when we get this waste, we used to get a lot of tender coconuts. And tender coconuts, you can't do much about it. It neither goes into the part as a part of RDF. It cannot go into the digestion also.
Yeah.
So we had to find some solution around it, and that's where this carbonization system came into existence, wherein our technology team and R&D team, they worked on this particular process and developed a carbonization system to fix the carbon, organic carbon, from this particular hard shell biomass. And we did a lot of experimentation on different feedstocks, hard shell products such as your walnuts, your dates, your coffee shells,
Okay.
and we got encouraging results.
Okay.
And that's how this independent carbonization system came into existence. So this is a decentralized product that we are marketing now, and in fact, Coconut Development Board has approved and recognized this particular product, and they are giving 25% capital subsidy also to the customers of this particular product.
Okay, so something that you developed by accident is actually working out with the help of government subsidies and encouragement as well. Then you're dividing this into like mainly three type of waste. One that goes into landfill, which is like residue, stone, sand,
Yes.
etc. And second is the RDF, which is basically inorganic matter that goes into cement factories or maybe
Right.
steel plants also, maybe because they have a very high calorific
Right.
value and they can use it for generating
That's
heat.
correct. That's correct.
And first is the organic waste,
Yes.
which you convert into
Biogas.
the biogas.
That's correct.
Okay, and I don't remember the names. I'll actually read out because these are the names of your technology.
Yes,
Okay,
yes, sure.
I didn't have time to buy hard this.
Sure.
Marudram, Dryad, Sanjeevak. So are these your like tech trademarks? What are
Yes,
these?
so these are patented products, and in fact, Marudram and Dryad is already a patent which has been granted to the company.
Okay.
And for Sanjeevak, we have already applied for the patent, so it's in work in process, and it will be soon granted. And there are other proprietary processes also that we are trying to develop because we have a very robust R&D cell. And as I was narrating you earlier, as I was narrating to you earlier, the whole idea is to develop this company as a technology platform.
Right.
To develop sustainable solutions, to develop innovative technologies to process various waste streams. And that is what we are doing here. So yeah, these are three technologies. So essentially, out of this, if you see, so Dryad is the technology which we use to set up biogas plants.
Yeah.
So this is a digestion process that is patented by us.
Okay.
Marudram is effectively a pre-treatment equipment.
Okay.
We have tried now to commercialize it as an independent product, because a lot of MSW projects are coming in,
Yeah.
Wherein there is a requirement of effective segregation, and because we have been there, done that,
Yeah.
Marudram is a product which can solve a lot of problems or challenges when it comes to segregation of waste for these project developers.
Got
So
it.
that is something which we have commoditized now.
Okay.
And carbonization, so Sanjeevak is again a carbonization system.
Yeah.
That is a decentralized product for rural market, for embedding into your typical MSW plants where there is hard shell biomass available.
Okay.
As an add-on.
Okay.
So that's another product that we have.
Okay, so to summarize this, Marudram is like you put the waste onto the conveyor belt or whatever.
Yes.
It segregates the waste into organic and inorganic.
Yes.
And Dryad is that the organic waste which is segregated already, that is converted into the biogas,
Biogas, that's
using your
correct.
technology.
Yes.
And you said Sanjeevak is for that hard shells of fruits or whatever,
Yes.
nuts, that can get converted to biogas.
That gets converted to carbon.
Carbon,
That gets
yes.
converted to green charcoal.
Okay.
Now this particular product, again, it's a very interesting product because you have n number of applications from this particular product. One, it could be a very good raw material, input material for activated carbon. Another is that you can make your green charcoal out of it, which
Okay.
can be utilized to supplement your briquettes, barbecue, coal or briquettes, and you can also manufacture dhoop out of it.
Okay.
Now,
Charcoal.
yes.
Okay.
So apparently, now you see, India is a country of temples, right? And a decentralized product like this, wherein you are getting the feedstock also at source,
Yeah.
right? Because you have so much coconut coming in terms of offering at temples, and it is getting processed right there, and you are getting the product, which is again, it's a traditional product wherein you can offer that dhoop to the devotees who are coming over there. It's itself is a 360-degree kind of a circular solution
Inside the temple.
for temples in India.
Yeah.
Right. So this product particularly has a unique scalability, and because of its varied applicability, we are trying to scale it up in different segments. So this being one, yeah.
Okay.
So as I said, we don't want to focus only on municipal solid waste,
Yeah.
but various aspects of waste and circularity.
Okay, sir. We spoke about your business, and you said that these are the type of waste that we treat, and this is what we manufacture out of it, or produce out of it, or convert.
Right.
Okay. Now, tell me, what are the ways that you're earning revenue? This is all okay, the technology and
Right.
types of waste that you treat.
Right.
I heard there is EPC and something called BOOT.
Right.
Can you tell me more about that?
Typically, our revenues comes from projects, products, and services,
Yes.
right? So when we talk about projects, it has two verticals, EPC and BOOT.
Okay.
Now for us, we are very selective when it comes to BOOT projects.
Okay.
And as
What is BOOT?
built on operate and transfer,
Okay.
wherein a project developer or a technology provider has to invest his own capital, set up the plant, and operate the said plant for a stipulated time frame before handing it over to the corporation.
Okay.
Now we are being very mindful of BOOT projects. We are being mindful in terms of select projects if we have to bid for on BOOT basis only if there is a processing fee available on their contracts.
Okay.
Right? Because there has to be a skin in the game of corporation when it comes to BOOT projects.
Of course.
So as to manage the supply side risk and other inherent operational issues. So as a company, our focus predominantly has been on EPC projects.
Okay.
Except for the fact that Solapur project
Yes.
was one of the BOOT projects that we had set up initially because we had to demonstrate the technology at scale at that
was
point
more
of time.
experimental.
It was more of a demonstration project for us. It was more of a developmental project for us because
Understood.
the technology got developed over there.
Okay.
Right? Having demonstrated the technology, the focus is very clear that we want to, because we are a technology platform, we want to be a TEPC company, not a EPC, again, traditional EPC company,
Yeah.
like you have in civil,
Yeah.
or infra space,
Yeah.
but a technology-driven EPC company who can set up these projects for project developers, handhold them in conceiving the right project, because what happens in India, particularly if you see and particularly if you talk about MSW projects, conceiving the concession agreement and the right concession is also very important, right? So we guide and we handhold our customers and our clients right from selecting of projects, doing feasibility studies over there, designing the project based on the waste characterization and the composition of waste that is available, and then finally executing the project, extending the due guarantees and warranties on the processes, and
Okay.
also undertaking the O&M responsibility if needed.
Got it. Got it.
So that's the business model that we have been working on. and our revenues are from EPC projects.
Okay.
Then from product sales. So as I referred
Yeah.
to you, Sanjeevak,
Yeah.
then the charcoal or the RDF. So this comes under product sales.
That products you sell to companies like your infra companies
Yes.
who will implement it in the
Correct.
plant.
And or private developers or
Yeah.
interested entrepreneurs. For Sanjeevak, it is mostly interested entrepreneurs who want to set up smaller decentralized products, right?
Yeah.
For example, Palluchi in the state of Tamil Nadu. It has been a hotbed for activated charcoal production, and very recently Pollution Control Board got a mandate. They brought a mandate rather and directive to stop all the production facilities, because those were traditional ovens that they were using, and there was a lot of emission issues.
Okay.
With Coconut Development Board subsidy in place, this particular product becomes a instant solution for these players to actually come and set up this particular product for their own production requirements.
Okay.
So that is how we are trying to evolve this particular product in this particular space which is other than MSW. Then our major revenue comes from consulting services or engineering services.
Major revenues come
Major
from
as
consulting.
in for this financial year, if you see, roughly around 41% of revenue came from engineering services, because
Okay.
we have been doing a lot of feasibility studies, DPR preparation work for oil PSUs, for private companies who are wanting to enter into this sector and space. So we are working and we are developing engineering services for them. So essentially how we work is, then when we talk about EPC projects, what entails in EPC, right? It is, and engineering is an important component in EPC. It's
Yeah.
engineering, procurement, and construction. Now, when we talk about engineering, it's not cut, copy, paste for us. You have to really deep dive and dwell into the characterization of the waste available, the seasonal variations, the requirement for feedstock preparation, and you need to design the project. You need to customize the project for that particular city or for that particular geographical area.
Okay.
So when we undertake EPC, because these are long gestation period projects, typically a project takes anywhere between 24 months to 36 months to complete large infra projects, right? First you do engineering only. So because we have entered into a lot of strategic partnerships last year with a lot of interested project developers, we were able to bill for engineering services.
Got it.
Now the execution part will follow through once their financial closures are in place, once the projects are once the projects are in the execution phase.
Okay.
That EPC the execution revenue would start.
Understood.
Yeah. So typically for us, revenues come from EPC, revenue comes from product sales, and revenue comes from services.
Okay.
That's how we are working.
And so let's break it down. You said 16%, around, not 16%, 40% of that 44 crore revenue that you did in FY25
was from engineering.
Came from
was from
consultancy.
engineering. Yeah, engineering. So
Okay.
we put it to consulting because it's an part of consulting, right? It's an engineering for us.
Okay.
Yeah.
Like there was no manufacturing. It was all that you sat in the system and put your study together and prepared a feasibility report.
Not only feasibility reports, complete engineering, as I said, right?
Okay.
So there is you need to do basic engineering, you need to do detailed engineering for a project to get constructed.
Okay. Right.
Right. So
Yeah.
I mean, it's a huge exercise.
Okay.
When it comes to setting up these projects.
Okay. So 16 crores came from 16 crores meaning 40%.
Roughly around 13 or 14 crores, I would say.
14 crores came from that engineering bit. Then what about the plant that you already have, Boot, under BOOT?
So Solapur, because we are under upgradation, and as you, I think you would have seen the CWIP also in it, because we are undergoing the upgradation.
Yeah.
Solapur did a revenue of somewhere close to 4.5 crores or something like that.
Okay.
From operations per se.
Okay.
And then I mean this is plant revenue that I am talking about. And your product sales were roughly about 25-30%, and 22-23% was your project sales,
Okay.
which came from projects, because we were able to commission the KDMC project in this the past financial year that we are talking about.
Okay, sir. So engineering got 14 crores, Solapur plant generated 4.5 crores. So product would have generated 24 crores around?
Yes, that's correct. Roughly
Okay.
around product sales happened at
Okay.
24 crores and rest came from the projects. And now going forward, this equation would change because now the projects for which the engineering has happened
Yeah.
will get into execution phase.
So that will go into product, I presume?
Projects that will get into project revenue.
Project revenue.
Project revenue.
Okay, so that engineering that you have done, because it's becoming feasible and the implementation is going to happen,
Yes.
it will
Now
be converted into
projects.
Projects.
And then the project execution revenue would come in.
Okay.
So,
okay.
so for typically EPC also what we are doing is Sri Ram, that for BOOT projects rather, because I
Yeah.
touched upon EPC, for BOOT projects we are not directly bidding for BOOT projects.
Okay.
As I said, unless until there is a tipping fee element available. But there are a lot of corporates who are interested in these BOOT projects. They want to explore this sector. They are interested in venturing into this sector, but they don't have access to technology, or
Okay.
they don't have access to operational know-how.
Yeah.
So there we are partnering with them as a technology partner
Got it,
or a
got it.
technology company,
Yeah.
assisting them in securing these projects
Yeah.
and executing these projects for them.
Understood,
So
understood.
even for BOOT projects, and probably in those BOOT projects, we may take some stake in future.
Okay.
If these BOOT projects are adhering to our selection criteria.
Okay.
So that way we have kept it open, because at the end of the day you have to consolidate projects
Okay.
by way of EPC and BOOT.
Yeah.
But for BOOT we are being absolutely mindful on what kind of projects to bid and with whom to bid for. I mean, you have to have a right partner to
Absolutely.
develop BOOT projects. So that's what our thought process
Okay.
has been.
So what I hear is, because you've got the good technology in place,
Yes.
if private companies or municipal corporations were to develop their own plants,
Yes.
you will do an engineering study for them where you will charge, like say, consulting charges,
Yes.
whatever, and then you'll also sell them your products and technology.
Correct.
Right? And
Correct.
then you might take a stake in that business through that.
If it is a BOOT
If it
project,
is a BOOT
we
project.
may.
Yes.
And if it adheres to the criteria, as I was saying, one of the important criteria being a presence of or an inclusion of a tipping fee.
Okay, then let's talk more about your Solapur project,
Yeah,
because it's your BOOT project that you did,
yeah.
and your business financials are very opaque in terms of where the revenues are coming from, and you don't do con calls either. So the Solapur plant, you said 4.5 crore comes from there. So what is the stake of Solapur in that? Do you pay royalty fee? Do you pay bribe? Whatever. How does the revenue work there?
No, so again, I mean, I don't know how to respond to that question, but see, typically for BOOT projects, right?
Yeah.
It is the investment that the project developer does.
Yeah.
And how these projects get secured is typically through open tender processes.
Okay.
And you have to have a qualification criteria to bid for the project. And then once you bid for the project, you get, if you are qualifying for the within that criteria, you have to quote for the project, and then you secure this project.
Okay.
Now, Solapur project, when we had acquired this particular project, they had a condition of revenue share on compost at that point of time.
Okay.
Because it was one of the early stage projects.
Understood.
Which again predates your modern, your present scenario. If you see projects that are coming today on built on operate basis, if it is on mixed waste, there is an element of processing fee. So rather, corporations are paying processing fee to project developers, wherein you set up these projects and you get a processing fee. Like for example, you narrated Antony, right? At I believe at PCMC project, they are getting a processing fee.
Okay.
For their MRF facility at Thane, they are getting a processing fee. So things are changing now, and as such, it came that few players, they tried the royalty route to consolidate the projects. That they went ahead and they offered royalty to municipal corporations for revenue share. But if you honestly ask me, these projects would not sustain for long, because there are inherent supply issues when it comes to quality and quantity of waste being delivered at site.
Right.
So revenue share, if at all has to happen with certain caveats and certain stringent conditions.
Yeah.
If corporation is willing to give 100% assurance on segregated waste,
Yeah.
and they are guaranteeing the delivery of quantity and quality of waste, then maybe one can think about sharing the royalty, but not otherwise. And that's why I said that we are being very mindful when we build, when we go for boot projects these days, and we don't bid for projects where there is a royalty asked. At Solapur, because it was one of the previous projects, it was an early project, it was a demonstration project for us as well, and that time the norm or the standard was to share revenue with the
Yeah.
corporation.
Okay.
We had to share a nominal revenue on compost share with the corporation.
Okay. Okay.
And that's what we are sticking to. But at the same time, that particular revenue share was linked to the performance of corporation, guaranteeing the quality and quantity of waste.
Got it. Got it. Got it. Got it. So because of that slight revenue sharing that you have, you are getting consistent waste supply of, let's say, 400, 360 tons per day.
So we are getting, again, it was a steep learning curve for us. As I said, we had a lot of operational learning curves when we started. This was our first project. We set up this project for an installed capacity of 400 tons. Corporation could not deliver us more than 240 tons till date.
Okay.
So in fact, we had to operate the plant at 50% PLF for all these years. Okay.
Okay.
But when Satat came in, when now with the tariffs that are there for offtake of CBG.
Sorry, I don't know what Sadat is. Can you give one sentence?
So it's a policy guideline by Government of India for sustainable alternative to affordable transportation fuel.
Okay.
So all oil PSUs have been mandated to procure compressed biogas
Okay.
from such projects,
Okay.
either from MSW to biogas projects or
Yeah.
from biomass, agro biomass to CBG projects, to procure this biogas and blend it with their CNG.
Understood.
Okay.
Understood.
So as to reduce the reliance on CNG.
So it's almost like ethanol blending in petrol.
Correct. Correct.
Okay.
So now the tariffs are very encouraging, and
Okay.
that's why we decided to, as I was referring to Solapur 2.0,
Yeah.
and if you would have seen in our investor presentation also, that is the reason why we are upgrading this plant from waste to energy to waste to CBG now,
Okay.
along with a co-digestion approach, and we will be utilizing our spare capacity to process Napier grass,
Okay.
which is an energy crop, which has a good biogas generation potential, and we will be taking this feedstock to our spare reactor and generating compressed biogas of it. So in fact, Solapur project will become one of the unique projects, if you ask me, wherein you will have a demonstration of both the technologies,
Okay.
your waste to electricity also and your waste to CBG also,
Okay.
because we will be utilizing this biogas itself for our captive energy generation.
Okay.
For running the plant, CBG plant.
Okay.
And we have already cultivated 150 acres of land in Solapur district for Napier grass, so as to have access and control on the feedstock.
Okay.
Because again, in agro biomass, what happens is, if you don't have access to feedstock, then aggregation is an issue. I mean, you don't have virtually control on the quantity and the price of the feedstock. So we were being very mindful, and that's why it took us some time to actually venture into CBG and venture into agro biomass, because we wanted to get it right.
Okay.
So when you talk about MSW as a feedstock and when you talk about agro biomass as a feedstock for biogas, both are very distinct. For any agro biomass to digest, it takes more time because it has a lignin matter in it. Though lignin does not get digest, but it takes time. So the idea was to identify a process wherein we can reduce the time taken for digestion. So there we were able to partner with the National Institute of Bioenergy, Kapurthala, which is a Ministry of New and Renewable Energy initiative, and they had developed a strain of microbe, again thermophilic strain, that was able to digest this Napier grass and agro biomass effectively, more efficiently, and because of that we were able to reduce the digestion time, thereby reducing the area footprint for the digesters.
Okay.
Right. So as I was narrating, right, I mean, I'm digressing here a bit, but as I was narrating that our approach has been on working in a very niche space, identifying the problem areas of waste management, and then developing solutions across these identified problem areas so as to, improve the efficiency of the process by way of either improving the yield or
Yeah.
by way of reducing the cost of implementation, right?
Got it. Got it.
That's what has been our approach. So with Solapur, we have already commenced the upgradation. We have already completed the cultivation. We have set up a pilot plant with NIB, wherein we are taking this culture, which was there with NIB at lab scale, and we are commercializing it now.
Okay.
And we have set up a pilot for doing that. And similarly, on the purification system also, if you see, when you talk about or when you see the existing projects that are there in this particular space, a lot of issues are cropping up or are being discussed in terms of efficiency of the final biogas as a product, final CBG output that is coming. Whether you take it in terms of purity of that particular gas, in terms of methane percentage or quantity of gas that is coming out of the purification system. So there also we have tied up with Indian Institute of Petroleum, which is a marquee institute in itself, and we have licensed their technology on VPSA for further sweetening and scrubbing this biogas to recover compressed biogas. So it will be kind of a unique proposition at Solapur, wherein we will be able to not only integrate multiple feedstocks, but also demonstrate different technologies coming together.
Got it. Got it.
So that's what the idea is.
Okay, so all in all, since they're not able to supply you the full waste capacity that you can utilize in the plant, you're going for the pilot project,
Right.
okay, which is the new technology.
Right.
So now, see, I've got 5 minutes around the clock more.
Sure.
Just a quick fire round. Our revenue has increased by 70-80% last year. Okay, you've done north of 45-46 crores. So given that you're so optimistic about your business, tech is evolving, government is evolving towards your direction, what is the revenue that you're forecasting for FY26?
Well, I cannot answer or I cannot guide directly on revenue generation, because obviously it's an unpublished information.
Yes.
But all I can say is that we will be able to manage the growth expectation that is there, and we will be able probably to exceed the growth percentage also, because a lot of projects would come into execution phase, right?
Got it.
And as we have entered into a strategic partnerships with a lot of companies, and we are still evolving and we are growing, we are entering into a lot of partnership with these companies. I think in times to come, the growth will be substantial across the projects, products and services verticals, if I may add.
So is it safe to assume you will be exceeding last year's growth percentage number?
We may.
Okay.
We may.
It's a May. Okay.
We may.
And your margins are?
Yeah, because these are long gestation projects, right? And a lot of factors depend not on us but external also.
Yes.
I mean, clients' financial closure, clients' clearances on approvals.
Yeah.
So a lot of things are variable in these projects. So, yeah.
That's fine. And the margins, if Anthony Waste is doing like 21% of margin, if Anthony Waste is doing 21% of OPM, you are doing close to 36-37% of operating margin.
Right.
So do you think this will continue given that you have technological prowess?
This will continue, and that's the idea, because the distinction or the distinguishing factor, with other peers for us is that we are a technology company. We are not a traditional EPC, which is coming in and typically, working in a designed BOQ, by quoting for item rates.
Okay.
Because there is a technology element, because there is an operational experience that we bring on table to our prospective customers.
Yeah.
As I was narrating, that we do hand holding for these customers while conceptualizing the project so that they can get the project right. There is definitely a premium that we are able to generate out of our activities.
Okay, sir. So what is odd in your balance sheet was that you have 11 crores under loans under current assets.
Okay.
So what is this exactly? Who have you lent this money to?
So this is not loans. I think this is under the head of loans and advances.
Yes.
Out of this 10.5, because I checked this with my CFO also when you raised this question earlier.
Yeah.
So out of this 10.5 is to your regular vendors and suppliers in routine operations. These are trade advances. Towards our routine operations, and I think only merely a notional sum of 1.4 or 1.5 lakhs is towards loan to employees as per So it's more of a trade advance which is coming in, I believe.
Got it.
Yeah.
And 12.5 crores is given capital work in progress. What is this 12.5?
That's for Solapur upgradation that is happening, right? So because it's a 13-year-old plant, a lot of upgradation is required. So as I briefed you, right, that we commenced Napier cultivation at 150 acres of land.
Yeah.
It required a lot of infrastructure development when we went in, with this cultivation. Then there was a pilot plant that we set up. Then there are continuous modifications that were required for the existing plant to accommodate the CBG system.
Yeah.
So that is what this is about, and this is basically attributable to the upgradation of Solapur facility.
Understood. And I see 9 crores as intangible assets in your balance sheet.
Right.
This was last in FY24 intangible assets under development.
Yes.
Okay. So according to Indian accounting standards, it is that if the expense incurred for making something intangible and the intangible asset is feasible and technologically you can yield some value, then only you recognize in the balance sheet. So do you think this, what do you say, 9 crores gives you a technological advantage above all companies?
Correct. Yes, because if you see, essentially this particular 9 crore that we are discussing, it attributes to development of Dryad, it attributes to development of Sanjeevak, it attributes to development of Marudram, which we have now commercialized, right? So the products have already been commercialized, and that's why as per the accounting standards, we have been able to shift it to the intangible assets, because now the products are already commercialized and we are leveraging the know-how. Now just to highlight here, as I was narrating about carbonization system, now based on the technological prowess, there was a TPI validation, third party inspection and validation carried out by Coconut Development Board on the product, and Coconut Development Board granted the capital subsidy on this product based on that, right?
Understood.
So of course, I mean that has a distinctive advantage when we talk about intangible assets.
So that makes it feasible for recognizing it as an asset. Do you have any other business interest other than this company?
No, absolutely not. Since beginning, my entire focus has been on ORS, and I am there 200% for the company. And my younger brother Yashas is also into the company. He is spearheading the technology side. He is the group CEO, and he is spearheading a lot of R&D activities for us, along with our R&D head, Dr. Manju Tanwar. And so yeah, I mean, we don't, as a promoter, we don't have any other business interest, but taking forward ORS.
Great. And see, if you were a stranger, it would be kind of difficult to ask you this, but it's in the annual report. I did not go through. How much is the salary that you draw?
If I remember correctly, it's 3.5 lakhs per month. So that would be roughly around, and it is as per policy guidelines only, not a huge figure, right?
So that is a fun question, because in the public source, and I wanted you to be a bit awkward when I asked you that.
We are transparent about it, and for that matter, I have not taken an increment for last 2 years also.
So last question, a very serious one. In Delhi, Haryana, UP region, there's a lot of wheat and rice straws that are being burnt, and that causes a lot of pollution, health hazards. What is the solution that we can possibly build for that? That's my last question.
So if you see, a lot of traction is happening on paddy straw for utilizing this particular paddy straw as a feedstock for CBG plants, right? And there are few companies and there are quite few projects that have actually come up and have been commissioned in the state of UP, because UP was one of the first states to bring the bioenergy policy in this country. And they are giving additional fiscal and financial incentives to the project developers. And there is a lot of projects that have come up, particularly on paddy straw. in the state of UP, and Haryana is also picking up. But when you speak about paddy straw, see, again, paddy straw is a very tricky feedstock to work upon. You need to have a understanding on the required pre-treatment and the digestion process, because again paddy straw has a silica content issue in it, right?
Which is sand.
Yeah. So it affects the final product, it affects the biogas, and if you have to work upon it, the cost economics, I mean the cost towards treating paddy is slightly more than cost towards treating other feedstocks.
Okay.
But yes, people are working on it. Few people are working on gasification route. They have got into gasification, so they are utilizing this paddy straw as a biomass, and they are utilizing it to as a fuel, to generate steam, or to generate power. Most of the people, because there is a traction in CBG, are trying to utilize this paddy straw as a feedstock to CBG.
Okay.
Also.
Okay.
And yeah.
So you're saying, sir, this is evolving, but it's not organized yet. There are small solutions here and there that the companies are coming up with, right? So you spoke a lot about government, but personally, I don't take their word at surface value, because they had said they'll put some 5,000 odd CBG plants by 2025. Back in 2018, they made the statement, but now we're at 100 or 200 CBG plants at best. So, and I want to mention another thing. Despite all the Swachh Bharat mission and a lot of other missions, if you see your trade receivables, and let's assume government is your biggest customer at the moment, your trade receivable is 304 days. So despite government helping you also, they're hurting you by not giving you money.
Okay, so I think there are multiple questions here. I'll split it into two parts. I'll try to first answer your question on the 5,000 plans that were being planned. So please understand, government's intention was always right. And in fact, it was an ambitious, intention. Government was not to set up these projects. Government was an enabling factor, and they had asked oil PSUs to apparently, enable promoters to come forward and set up these projects. So if you see in the initial Satat phase, 5,000 LOIs were being distributed by oil companies to interested promoters. Now, what went wrong there probably was that, because there was no understanding of the technology, and the promoters also thought that, okay, we might as well as take the LOI and then see how to execute the project. The projects didn't see the day of the light, but government, realizing this fact, very quickly corrected their stand. And if you see, now most of the oil PSUs have been mandated to come and act as a project developer in this space by the government, right? So I think government is not backing out from their commitment or their vision of developing these projects per se. Rather, they are trying their best to ensure that they create an enabling factor or an enabling environment. What is probably not working is the understanding of promoters about the technology and the nuances of these projects, right? Because see, please understand that it is all, I mean, if any project fails, people very easily point out or blame technology over it. But it is seldomly, I mean, technology's fault. It is about how you have conceived the project, how you have, planned the project. What about supply chain? What about offtakes? There a lot of things need to be taken into consideration.
Understood.
So in that ways, I think yes, in the phase one of implementation, that was in 2016-19 pre-COVID, we didn't see a lot of positive movement or a growth. But post-COVID and currently, I mean, if you see last 1 or 2 years, there is a tremendous progress. A lot of awareness is there. A lot of promoters have become aware about the technology. I mean, we get to meet so many interested project developers and individual entrepreneurs who are coming from tier 2 and tier 3 cities, who have parcels of land available with them. They are equipped with the understanding on technology these days. I mean, you don't have to guide them on technology. They ask you questions which are relevant, right? So that homework has happened now. That awareness has happened. So that is one, and that has become, because that has been possible because of the push that was done by the government. coming on to Swachh Bharat Mission and the payments or the payment delays, so please understand Swachh Bharat Mission and the payments from corporations are two unrelated matters per se, because Swachh Bharat Mission SBM 2 guidelines as we speak, they are the guidelines, and I think they are very nicely drafted. They are again an enabler. There is a state share of fund, there is a center share of fund, and the implementation lies with municipal corporations. Now, unfortunately, yes, there is a bandwidth issue when it comes to municipal corporation, but again, that is also changing over a period of time, right? As far as our, if I have to speak about our case, as you said, see again these are long gestation period projects, right? So definitely, if you see the payment cycle with government projects, this take times because there are milestones based on which the payment comes, and then it goes for budget approval, then it goes for audit approval, then the payments get cleared. So it takes time. But out of this 36 CR which you spoke about, if you see roughly around, if I am not mistaken, 30 odd CR is less than 180 days, because a lot of progress happened and a lot of your execution happened in the second quarter of the financial year.
Okay.
So it is moving ahead as planned. So it is not so that it will be across the years this kind of payment cycle will be there. Also, we are, as a company, we are moving away from the government contracts, right? I mean, government contracts is one of the vertical or one of the prospective client, but now we are working with a lot of private players, a lot of corporates. So obviously, this payment cycle will improve.
Understood. Understood. So, sir, you're saying the Swachh Bharat is not related to this? Not entirely, but you are facing payment issues in terms of government, and that is how it is since tradition. And you're moving to more private projects to offset that risk.
Yes.
Okay. So I really appreciate you taking the time. It's been almost 1 hour of splendid conversation, and I appreciate you taking the time.
No, thank you. Thanks for all the time, and it was my pleasure to catch up with you.
Thank you, sir. Thank you.
Thank you so much. Okay. Done.